Hi everyone, welcome back to Saheb Academy. Today in this 10th video of Internal Reconstruction chapter, we're going to solve our 8th problem, which is illustration 8 from the ICAI study material. Now in this question, there is an adjustment of surrender of shares, and before the surrender of shares, the question has asked you to do the subdivision of shares also. So we have to properly understand these two concepts first. So let's do that and then we'll come back to this question. Okay, so let's go to the surrender of shares concept. Now see, here we have the concept of surrender of shares, which is really simple and straightforward, and it is pretty self-explanatory. Here what's happening is the shares are being surrendered by the shareholders. Shareholders are giving up the possession of their shares voluntarily or compulsorily to the company. Is that clear? So company is getting the shares in free of cost. The company is not buying them back. Company is just getting them free of cost from their shareholders. Shareholders are foregoing their shares. So company has got surrendered shares. Now what the company will do with these shares? Understand, there are two options. The first option is, which of course every company will go for, okay, mix of both. Okay, so first option is what? First option is the company will reissue those shares to settle any liability. What does that mean? Let's take an example and understand. Let's just say, for example, there is a creditor of 5 lakhs. Okay, we have to pay 5 lakhs to any creditor. Now we are not paying 5 lakhs to that creditor. Instead, we are going for this option 1. We are reissuing those surrendered shares to those creditors. So creditors will become our shareholders, isn't it? Yes. And that 5 lakh liability which was there now, that liability will be finished. Is that clear? So this can happen. So this is called as, reissuing the surrendered shares to settle any liability. This can also be done with the debenture holders. Let's just say, for example, there are debenture holders and they have a claim of, let's just say, 10 lakh face value of debentures. Okay, total face value of the debenture is 10 lakh, and then 50,000 interest is also outstanding to them. Fine. So in total, the debenture holder, let's say they have a claim of 10 lakh 50,000 on the company. Now instead of giving them cash of 10 lakh 50,000, instead of redeeming their debentures and paying 50,000 for interest, no, we are not doing that. Let's just say we are using the surrendered shares. We are reissuing the surrendered shares to the debenture holders and finishing off their liability. This can happen. Fine. And then what will happen? So all of the shares might not be used. All of the shares might not be reissued. There will be some shares left. Some surrendered shares left. So those shares will be cancelled. Those shares will be cancelled, and that amount will flow in where? That amount will flow into capital reduction account, or you can say capital reconstruction account. Okay, that's the entire concept of surrender of shares. So now let's just read this once. The shareholders may give up the possession of some shares voluntarily or compulsorily. As per the scheme of reconstruction, the surrendered shares may be reissued to creditors or debenture holders. They are talking about the first option, using the surrendered shares to settle any liability. And any balance of surrendered shares remaining unutilized, which are not used for settling any liability, unutilized surrendered shares are cancelled and transferred to capital reconstruction account, or you can also call it as capital reduction account. Is that clear? So that's the concept of surrender of shares. Now let's just understand the journal entries that you have to pass regarding this. Now before the surrender of shares, usually what will happen is there will be subdivision of shares. Okay, so you also need to understand that. But first let's see the journal entries of surrender of shares. So the first journal entry that you need to pass regarding surrender of shares is what? You have to cancel the capital, isn't it? The shareholders have given up their possession, so you have to cancel the equity share capital and take that balance to a dummy account called as share surrender account. See here, at the time of surrender, which entry you have to pass? This entry, share capital account debit. You have cancelled the capital. You all know capital has credit balance, equity has credit balance. To cancel it, you have to debit. Fine. Yes. So share capital account debit to share surrender account. Share surrender account is getting credited first. So understand, this account will have credit balance. Is it clear? Yes. And then the next entry is if the surrendered shares are utilized for the payment of any obligation, Now it is not necessary that this will always happen. If it doesn't happen, then you will not pass this entry. Yeah, I have written if over here. If the surrendered shares are utilized for the payment of an obligation. Is that clear? So if this happens, if they are going for option 1 also, mostly in every question they will, so then you have to pass 2 more entries. The first is you have to cancel the liability. Whatever liability they have set, you have to cancel that liability. How will you cancel the liability? Liability has credit balance, you all know, right? And to cancel you have to debit. So liability account debit, you will cancel the liability. Whatever they said, let's just say they said the shares have been given to the creditors of 5 lakh. So that 5 lakh creditors you need to cancel. Creditors account debit to capital reduction account. Yeah, as usual you will cancel the liability and that balance will go to capital reduction. Now it can also happen that they can say, debenture holders have been they have a claim of, let's just say 10,50,000 and surrendered shares are given to them. So in that case what you will do, you will cancel the debentures first. Understand, the entry will be like this: debentures account debit, okay, 10 lakh, you have cancelled the debentures, and then outstanding interest on debentures account debit 50,000 also you will debit, and then 10,50,000 will be credited to capital reduction account. Okay, that sort of entry you will pass. And then the second entry will be what? The second entry is the reissue of shares that have been surrendered. See here, share surrender account debit to share capital account. What's happening in the second entry? In this second entry, the surrendered shares are being reissued. See here, share surrender account debit. Yeah, you are cancelling the account. Yeah, now the amounts can be different. Of course, the amounts will be different. So you have to understand. We'll see practically. Share surrender account debit. You are cancelling that amount of share surrender account, and then you will credit the share capital account because the shares are being reissued. Yeah, yes. And then after this you have to see, let's just say for example here you had share surrender of 20 lakhs. Yeah, 20 lakhs cancellation happened, and then let's say only 5 lakh has been utilized. Only 5 lakh has been utilized to cancel the creditors liability, and then remaining 15 lakh, what will happen? For remaining 15 lakh, you will transfer that amount to capital reduction account. So here balance of surrendered shares remaining unutilized are cancelled. How will you cancel? Really simple. See, first it was credited. Now share surrender, it has credit balance. So to completely remove the balance from that account, you will have to debit by the remaining amount. Share surrender account debit to capital reduction. Is that clear? Simple and straightforward. Now let's just take an example to understand this properly. Okay, let's say for example there is a share capital of 20 lakhs. Okay, equity share capital, and 50% has been surrendered. Okay, and there is a creditor, okay, creditors of 8 lakhs. Now these creditors have accepted 6 lakh worth of shares in full settlement. Okay, fine, those surrendered shares only. Okay, so now how will you do this? Now first the calculation that you have to do is how much has been surrendered. See, a 50% has been surrendered, so 20 lakhs into 50% is 10 lakhs, right? So share capital account to share surrender account, 10 lakhs. Is that clear? Simple and straightforward. And then you need to know about the liability. You need to cancel the liability now. How much you have to cancel? You have to cancel the book value, isn't it? Because it's saying full settlement. If it's saying full settlement, then all the 8 lakhs you need to cancel. Creditors 8 lakhs now, all the 8 lakhs you need to cancel. Creditors account debit to capital reduction account, 8 lakhs. You have cancelled of the liability. Now what are you giving to creditors? You are giving shares to creditors, right? So now what you have to do? You have to pass this entry. See here, share surrender account debit. Will you take 8 lakh over here? Of course not. You will not take 8 lakhs. You are giving shares of how much? Only 6 lakh, isn't it? See here, surrendered shares were 10 lakh. Fine. So you pass this entry. So you now have 10 lakh amount in share surrender account. Now out of this 10 lakh, they have said creditors have accepted 6 lakh worth of shares. Yes. So you will debit share surrender account by 6 lakh. Only that much you will cancel. Fine. and those shares will be issued to creditors, and the credit will be here to share capital account, because those shares are reissued. The same shares are reissued to share capital account 6 lakh. Is that clear? For creditors, you will pass only this entry, cancellation entry. The second entry is also for creditors, but here creditors name will not come, because here directly the shares are being issued. Share surrender account is getting closed, and then shares are being issued. Fine. Okay. And then the last entry is balance of surrendered shares remaining unutilized are cancelled. So see here, balance left in share surrender account, really simple. Total surrendered shares were of 10 lakhs minus how much you utilized for creditors? 6 lakh. 6 lakh worth of shares you gave now. So now remaining is 4 lakh. This 4 lakh will go to capital reduction account. Clear? Share surrender account debit to capital reduction account. Yeah, whatever balance was there, you have debited and completely finished off the surrender account from the books. Always you have to do this. Even if the question doesn't say, automatically you have to take the balance of surrendered shares and cancel them, and then whatever the amount is, that will flow to capital reduction account. Is it clear? Really simple and straightforward. Now this is the concept of surrender of shares. Okay, fine. Now we have to understand subdivision of shares, because usually before this surrender of shares there will be subdivision. Fine. So let's understand the concept of subdivision. Now see, here we have the concept of consolidation of shares and subdivision of shares. Let's understand both of these, because they are interrelated and they are exactly opposite to each other, and it becomes very important to understand this from the exam point of view. Okay, so see here, consolidation of shares means combining the existing shares of smaller amounts into larger amounts. Okay, but understand here, there will not be any change in the capital. In the issued capital, there will not be any reduction or anything. No. Before the consolidation of shares and after the consolidation of shares, the issued capital will remain the same. Is that clear? So let's just read this once, and then I will explain this in very simple words with the example. Okay, see here, it means to consolidate, yeah, to combine its existing shares of smaller amounts into shares of larger amounts. The amount of the issued capital remains unchanged. It will remain same. Only the number of shares and corresponding value of each share changes. Okay, so there will be change in number of shares and corresponding value of share, and they will move in opposite directions. Okay, let's understand this with the help of an example. See the example over here. Let's just say, for example, S Limited, having 10,000 equity shares of rupees 10 each, decides to convert share capital into equity shares of rupees 100 each. What does that mean? This S Limited company has 10,000 shares of face value rupees 10. Okay, rupees 10. And now this company wants to convert its share capital into equity shares of 100 each. Face value is increasing. Yeah, face value is increasing to 100. But understand, if face value is increasing and the issued capital remains unchanged, let's just see what's the issued capital. Issued capital is 10,000 into 10, that's equal to 1 lakh, isn't it? 1 lakh. So issued capital will remain same only, 1 lakh only, and they are saying what? They are saying that face value should be 100. So obviously what will happen, if you take the issued capital 1 lakh and divide it by 100 face value, then obviously number of shares will decrease, isn't it? See, number of shares will be 1000. Issued capital is same, face value has been increased to 100. Yeah, face value has been increased to 100. So what happened to number of shares? Number of shares has been decreased to 1000. Yeah, that's what I said over here. Only the number of shares and correspondingly value of each share will change. Okay, and they will move in opposite direction, these two. Yeah, that's what we saw now. Previously there were 10,000 shares. Now after converting to 100 face value, what happened to number of shares? Of course it has to decrease. Yeah, see here, see the calculation, it's really simple. 10,000 shares into 10 face value. Yeah, this was 1 lakh is equal to, into 100, let's just leave this blank for now, equal to 1 lakh. We know this will remain the same, this will not change, 1 lakh capital. Yeah, so now what you are going to do? You're going to take this 1 lakh, divide by 100, you will get this 1000. Is it clear? Simple. This is existing share, these are new shares. and issued capital is same only, 1000 into 100 1 lakh, 10,000 into 10 also 1 lakh. So here what's happening, just the face value is changing and number of shares are changing. That's all happens in this consolidation and subdivision. In consolidation, what did you do over here? There were 10,000 shares of small amounts of 10 rupees, 10 rupees, 10 rupees. You combine them, you combine those 10,000 shares into 1,000 shares of large amounts, 100 rupees. Is that clear? And issued capital is same only. Fine. So there is no reduction or no increase in capital, okay, because of this. So now what journal entry will you pass? The journal entry is really simple. See here, equity share capital account debit to equity share capital account. Yeah, you will debit also equity share capital and credit also equity share capital, but understand, you will debit with the old face value and credit with the new face value. Okay, is that clear? Amount is same only, issued capital is same only, even before also, after also, 1 lakh, 1 lakh. Is it clear? Simple and straightforward. Now moving on to the subdivision of shares. What does subdivision of shares mean? It's really simple. Here what you are doing is you are breaking the shares, yeah, you're breaking the existing shares of larger amounts into smaller amount, into shares of smaller amount. Yeah, see here, let's just read this. It's exactly opposite. It means to subdivide its existing shares of larger amounts into shares of smaller amounts. This is exactly opposite to consolidation of shares. Yeah, it's exactly opposite. Just read this sentence and then read this. It's exactly opposite. But this thing is same only. Here also issued capital remains unchanged. It will remain same only, and only the number of shares and correspondingly value of each share will change. Okay, fine. So let's see the example of this also. S Limited having 1000 equity shares of 100 each. Okay, this S Limited has here 1000 equity shares of 100 each. Okay, so just see how much is the capital. 1000 shares into 100, that's equal to 1 lakh capital, issued capital. So now issued capital has to remain same only. What else they are doing over here? Decides to convert share capital into equity shares of rupees 10 each. You see, they are reducing the face value. From larger amount of each share, they are coming to smaller amount of each share. Yeah, 10 rupees each. So you have to take that 1 lakh. Yeah, issued capital will remain same only now. Divide by rupees 10. Yeah, new face value. So that's equal to 10,000 shares. You see, exactly reverse example. Here from 10,000 they converted to 1,000 shares. Here from 1,000 the shares are converted to 10,000. Yes, 10,000 shares. So see the calculation. 1,000 shares into 100, 1 lakh. Yeah, that's the existing share capital, isn't it? From the first sentence you come to know. And then they want to convert to rupees 10 each share. Yeah, rupees 10 per share, the face value, and the capital has to remain the same only. Then 1 lakh divided by 10, that's equal to 10,000. We saw in the calculator, right? So this is the thing. Now here also the same journal entry you will pass, but it's just that the face value, equity share capital account debit, but here you will debit with the old only, rupees 100. Here also you debit with old only, but that was 10 now. Here old is rupees 100. Okay, you will debit the equity share capital account with the old face value, that's 1 lakh, and you will credit the equity share capital account with the new face value, that's rupees 10, and the capital is same only. Is that clear? Really simple and straightforward. So this is consolidation and this is subdivision. Fine. And subdivision is also known as split up of shares. Okay, in news and all, or in the media you will find split up of shares. This term is very popular instead of subdivision. Okay, fine. So that's regarding the consolidation of shares and subdivision of shares. Consolidation of shares means what? This is combining the existing shares of smaller amounts into larger amounts. You saw now, smaller amounts 10 rupees to 100 rupees. Yeah, previously there were 10,000 shares and now there are 1,000 shares. And here subdivision means breaking the shares. Yeah, breaking the shares of larger amounts, yeah, 100 rupee larger amount into smaller amount of rupees 10, and the number of shares will increase. You're breaking down now. If you're breaking down, then what will happen? There will be more pieces. Yeah, 1000 shares were there, you broke them into 10,000 pieces, right? Here you are combining, there were 10,000 pieces, you combined them into 1000 shares. Is that clear? So that's the thing. Fine. So that's all regarding consolidation of shares and subdivision of shares. I hope it's pretty clear now. So we can move to our question, problem 8, illustration 8. Okay, let's go over there. Now see, here we have the question, illustration 8. The balance sheet of Revise Limited as at 31st March 2021 was as follows. So here we have been given the balance sheet and notes to accounts. So see, share capital, note number 1, 10 lakh. So if we go to the note over here, we have 10,000 equity shares of rupees 100 each, that's 10 lakh. Fine. And then reserves and surplus, you can see note number 2, 6 lakh negative, so that's definitely loss. Debit balance of profit and loss account, 6 lakh negative. Okay. And then non-current liabilities, long-term borrowings, note number 3, 2 lakhs, so that's 12% debentures, as you can see over here. And then current liabilities, trade payables, 72,000. Okay. Other current liabilities, note number 4, 24,000. Fine. So let's just check that out. Other current liabilities, interest payable on debentures, 24,000. So now immediately you have to understand what is the claim of debenture holder, what is our liability to debenture holder. In the adjustment they will say debenture holder, so you have to understand when they are talking about debenture holder, what's the amount. The amount is not just 2 lakhs, no, the amount is 2 lakh plus 24,000. okay, 2 lakh 24,000. is it clear? 2 lakh is the face value of debentures total, plus 24,000 interest that is outstanding to them. So the total claim of debenture holder is how much? 2,24,000. okay, you have to be very careful about this, otherwise you will make mistakes while passing the entries. Fine. So that's the claim of debenture holders. And then see, moving on, short-term provisions, note number 5, 24,000. okay, short-term provision for taxation, as you can see, it's 24,000. And then come to the asset side, non-current asset. And then come to the asset side, see here, assets, non-current assets, property, plant and equipment, note number 6, 1 lakh. okay, so you can see over here, that's machinery, 1 lakh. Fine. And then in current asset we have inventory, 3,20,000, trade receivables, 2,70,000, cash and cash equivalents, 30,000. Fine. So the total of balance sheet is 7,20,000. Fine. So now see here, the scheme of reconstruction. It was decided to reconstruct the company, for which necessary resolution was passed and sanctions were obtained from appropriate authorities. Accordingly, it was decided that, there are how many adjustments? 1, 2, 3, 4, 5, 6, 7. Yeah, in total 7 adjustments are there in this scheme of reconstruction. You are required to show the journal entries giving effect to the above and the resultant balance sheet. So you have to pass the journal entries of this and then give the effect in the this balance sheet, and create the balance sheet after the reconstruction. Fine. So let's just do that. Let's just pass the journal entries one by one by looking at the adjustments. Now see, here we have the solution. In the books of Revise Limited, we have to pass the journal entries, and here's the scheme of reconstruction. Let's start with the first adjustment. A, each share is subdivided into 10 fully paid up equity shares of rupees 10 each. Yes. So now easily you can understand, here in this adjustment they are talking about subdivision of shares. Now what is subdivision of shares? Just now we saw the meaning and everything, the concept with the example and everything, what is meant by subdivision of shares. What is subdivision of shares? It's nothing but just breaking down the existing shares of larger amounts into shares of smaller amounts. Okay, that's what you are going to do. So see here, they are saying each share is subdivided into 10 fully paid up equity shares. So every share is getting converted into 10 shares. Okay, 10 shares. That's what is happening over here. So now you have to see in the balance sheet, and the issued capital will remain the same. It's just change in number of shares and the face value. Okay. So see, existing shares are how many? 10,000. So the ratio is 10 for everyone. Yeah. So 10,000 existing shares are there, and they told you, each share will be converted into 10 fully paid up equity shares. So into 10, that's equal to 1 lakh. Yeah, 1 lakh will be the new number of shares. Okay, and immediately what will happen? Immediately this face value will come down. Yeah, because see, 10 lakh is the capital and Now the number of shares are 1 lakh after the subdivision. So let's just divide 10 lakh divide by 1 lakh. Yeah, this is issued capital, which will remain the same, and this is the new number of shares, so that's equal to 10. So face value has come down. Number of shares have increased, but the face value has come down. Okay, so this is called as subdivision of shares. Is that clear? So now how will you pass the journal entry? We have seen it's really simple. What do we do in subdivision? In subdivision, how do we pass the entry? See, it's really simple. Equity share capital account debit to equity share capital account. Yeah, you will debit also equity share capital and credit also equity share capital. Okay, you will debit with the old face value and you will credit with the new face value. That's what you will do. Fine. So see the journal entry over here. It's really simple. There is nothing over there. See, equity share capital account debit 100 was the previous face value in the balance sheet. Yeah, debit 10 lakh only, this issued capital only, and then you will credit to equity share capital account with the new face value rupees 10. Just now we calculated, right? So that was 10 lakhs. Okay, so see the calculation over here. Existing shares, old shares were 10,000 into old face value 100, so this is 10 lakhs. Okay, that's equal to, and we got to know that, you know, the company is going for subdivision of 10:1, isn't it? Each share is getting converted into 10. So then we understood 1 lakh is the new number of shares, and then here we know the issued capital will remain the same. So 10 lakh divided by 1 lakh, that's equal to 10 rupees. 10 lakh divided by 1 lakh, that's equal to 10 rupees. Is that clear? Simple and straightforward. Okay, and then see the B adjustment. Let's move on. After subdivision, each shareholder shall surrender to the company 50% of his holding for the purpose of reissue to debenture holders and trade payables as necessary. Now understand, hold on a minute. Here what they are saying, here they are talking about surrender of shares. Yeah, that much is clear. And then immediately in this sentence only, they are also talking about reissue and all. But see, they are saying for the purpose of reissue to debenture holders and trade payables as necessary. So that means now in the second adjustment that has not happened. In the second adjustment, only surrender of shares is happening of 50%. Is that clear? So how many shares are there? 10 lakh shares are there, isn't it? Sorry, 1 lakh shares are there, right? In total, the equity share capital is of 10 lakh. So now they are saying surrender of 50%. Yeah, surrender of 50% means 50,000 shares will be surrendered. Yeah, 5 lakh capital will be surrendered. Is it clear? Exactly half. Fine. So now when the shares are surrendered, shares are given up by the shareholders to the company, then what does the company do? I have already told you properly. The first entry that the company passes is what? At the time of surrender, equity share capital account debit. You will cancel the capital by that amount, and then you will take that amount to a dummy account called as share surrender account. Okay, this entry you have to pass. So see here, we have passed this entry. We know the amount is 5 lakh, isn't it? Yes. So see, second entry, equity share capital account debit 5 lakh to share surrender account 5 lakh. Is it clear? Equity share capital account has credit balance. We are debiting it and cancelling it off, yeah, by 5 lakh, and then that amount is flowing to share surrender account. Now share surrender account will have credit balance. Now whenever you will utilize share surrender account in the next following entries, you will have to debit this account. Okay, keep that in mind. Then only the amount will be removed from this share surrender account. Okay, and finally everything has to be finished by making a debit and transferring to capital reduction account. Okay, we'll see, don't worry. So this entry you understood? Okay, fine. Let's move on. Then they are saying, see the C adjustment, out of shares surrendered, 10,000 shares of rupees 10 each shall be converted to 12% preference shares of rupees 10 each, fully paid up. So now here they are talking about the surrendered shares being reissued. Now I've always told you there are two options with the shares surrendered. The first is reissue of the surrendered shares to settle any liability. Yeah, and it seems like in the C adjustment they are going with the first option, and then the second option is, you know, cancelling the surrendered shares and taking the amount to capital reduction, isn't it? These two options you have. So now it seems in the C adjustment they are going for first option, that is reissue of surrendered shares to settle the liability. But now here they are just talking about reissue. not settling in liability. So let's just hold this adjustment for a minute and let's read the next adjustment. Okay, see here what did they say? Out of shares surrendered, 10,000 shares of rupees 10 each shall be converted to 12% preference shares of rupees 10 each. So they are saying 50,000 shares we got now from shareholders, 50,000 shares were surrendered. So 10,000 shares have been reissued as preference shares, as 12% preference share. That's fine, that can happen, of 10 each. So that's equal to how much? 1 lakh. Okay, so out of surrendered shares of 5 lakh, yeah, in this surrender account we have 5 lakh amount. So out of this 5 lakh amount, 1 lakh has been reissued as 12% preference shares. 1 lakh amount has been reissued. Yeah, preference shares have been reissued. Is that clear? That's what they are saying. But now we don't know exactly to whom it is being reissued, which liability is being settled. So that's why we can't directly pass the entry. You just hold on a minute and we'll just read the next adjustment also. Okay, the C and D adjustments are interrelated. Is that clear? Okay, so see here, the claims of the debenture holders. You see, the claims of the debenture holder means what? I've told you while reading the question itself. It means the face value of debentures, 12% debentures 2 lakh, plus the interest that is outstanding to them of 24,000. So 2 lakh plus 24,000, that's 2 lakh 24,000. Yeah, by that adjustment, by that sentence here, you have to understand the claims of the debenture holders means 2 lakh 24,000. Fine. Okay, so 2 lakh 24,000 shall be reduced by 75%, shall be reduced by 75% in consideration of the reduction. Yeah, why it is being reduced? Because of in consideration of the reduction, the debenture holders shall receive preference shares of 1 lakh which are converted out of shares surrendered. Now you can understand that C adjustment and D adjustments are connected. Yeah, 75% is being cancelled of debenture holders. See, 2 lakh 24 is the total liability to debenture holders. Yeah, face value plus interest, so that's 2 lakh 24 into 75%, that's equal to 1 lakh 68,000. So 1 lakh 68,000 amount is being cancelled of debenture holders. Why it is being cancelled? Why? Because 1 lakh worth of preference shares are being given to the debenture holders. And which type of shares are these? These are the surrender shares. Is that clear? Yeah, in the C adjustment they told na 10,000 into 10, so that's 1 lakh. Yeah, 1 lakh is being given to them. Here also they have said holder shall receive preference shares of rupees 1 lakh. So this is not some other preference shares. No, this is connected only. Is that clear? So now how do we pass the entries for reissue of surrendered shares to settle any liability? You all know I have explained while explaining the concept of surrender of shares. See here, if the surrendered shares are utilized for the payment of an obligation, the first thing that you have to do is you have to cancel the liability which they are talking about. Now here they are talking about 75% of the claim, and 75% of the claim is 1,68,000. So 1,68,000 you need to cancel of debenture holders. Okay, so see here, it's really simple. See the journal entry. Let me just show you. 12% debentures account, debit 1,50,000, interest payable account, debit 18,000. Now you'll wonder how did I get this 150 and 18,000? It's really simple. See, they have said 75% now. They have said 75% now. So of 2 lakh you will take 75%, that's equal to 1,50,000, and then of interest outstanding you will take also 75% of that 24,000, that's equal to 18,000. Is that clear? Separately you have to take 75% of the face value of debentures and 75% of the interest outstanding to debenture holders. Is that clear? So 1,50,000, 18,000. In total that's 1,68,000 only. In total that's 1,68,000 only. Is it clear? Yeah. So true liabilities you debited and you reduce this much amount from them, and then this amount is going where? It's going to capital reduction. So in this entry what happened basically? In this entry you reduced your liability. You reduced your liability to debenture holders because we are giving surrendered shares to them in this consideration. Fine. Okay, so this entry you understood now. Which entry is this? This is nothing but just reduction of the liability account debit to capital reduction. This entry you have passed. Now the second entry you have to pass, that is share surrender account debit to share capital. Yeah, you have to utilize the share surrender and issue the new shares. Okay, so see here, preference shares are being given, right? So share surrender account debit, you're utilizing now. See, previously at first here it was credited, it has credit balance. Now you're utilizing this share surrender account, you're utilizing the amount that is there in share surrender account. So you have to make a debit, share surrender account debit 1 lakh to 12% preference share capital account 1 lakh. Now how this 1 lakh came? It's given in the question. See here, out of the shares surrendered, 10,000 shares of rupees 10 each, 10,000 into 10, that's 1 lakh, shall be converted into 12% preference shares of rupees 10 each, right? So 1 lakh. Okay, and then here also they are explaining once again that, you know, those preference shares are given to debenture holders only. Yeah, 1 lakh, yes. So this is the entry, share surrender account debit to 12% preference share capital 1 lakh, 1 lakh. Clear, simple and straightforward. And then let's move on to the next adjustment. See here, now the next adjustment is bit tricky, you have to understand, because here there can be a language problem, technical language problem. Okay, so you have to properly understand this. See, E, trade payables claim shall be reduced to 50%. Stop right here. Now this is the first part of the sentence, that trade payables claim shall be reduced to 50%, and then immediately there is a comma, and they are not saying that in because of this or in consideration of this or something like that. Yeah, in the D adjustment here they told you the claim of debenture holder shall be reduced by 75%, and then there was a full stop, and then in consideration of the reduction. So they are telling you that in connection of that we are giving them surrendered shares, right, in this debenture holder adjustment. But here in trade payables, see what's happening is, in the first part of the sentence, trade payables claim shall be reduced to 50%, that's all, and then after the comma they are talking about something else. Okay, so that's why first let's just, you know, reduce the liability to trade payables by 50%. Yeah, how do you reduce liability in internal reconstruction? You all know, we debit the liability and the credit goes to capital reduction, isn't it? Because if the liability is reducing, then, and we are not making any payment or anything, just the trade payables are, the creditors, the trade payables are just foregoing their amount, then that's a gain for us, and that we take to capital reduction, right? Simple general entry. Okay, so that entry will pass, reduce the trade payables by 50%, that's all. Okay, so see, the trade payables are in the question how much? 72,000. So 72,000 into 50%, that's equal to 36,000. So this much we have to reduce normally waive off, normal waive off. Okay, how much? 36,000. So see here, let me just show you, trade payables account debit to capital reduction, 36,000. Is that clear? Simple and straightforward. What is this? This is a normal waive off. This is not connected with surrender of shares, nothing. It's a simple waive off. We have been doing this in the previous problems also. Okay, there's nothing new in this entry, in this fifth entry. Yeah, trade payables account is getting debited because the liability is getting reduced, because the trade payables have, you know, waived off their amount, and then gain is getting transferred to capital reduction account. Simple, easy. Now in that same adjustment, in the very next part, what they are saying after the comma, it is to be settled by the issue of equity shares of rupees 10 each out of shares surrendered. Now you have to understand that they are talking about settlement. It is to be settled. Yeah, they're talking about settlement, means fully settlement. So they're talking about the remaining part, the remaining 50%. It is to be settled by the issue of equity shares of rupees 10 each out of the shares surrendered. Now you have to understand, now first they told you reduce the trade payables by 50%. So you did that, simple waive off, normal waive off, and then they are talking, see, and then they are saying after the comma, it is to be settled. What is to be settled? Not this 50%. Trade payables is to be settled. Trade payables is to be fully settled by the issue of equity shares of rupees 10 each out of the shares surrendered. Okay, so here they are not telling you how many number of equity shares and all, so you will exactly take it equal. Okay, which means, see, 72,000 were the trade payables. Yeah, out of that 50% you reduce, that's 36,000. So how much is remaining? 36,000 is remaining, isn't it? If 36 is 50% of 72,000, then how much is remaining? If this much you have reduced, the remaining is also 50%, 36,000. Yeah, so now you have to issue equity shares also of 36,000. Is it clear? So that's the logic. Fine. See here, trade payables account debit to capital reduction. Now what's happening with the remaining trade payables? We are giving them surrendered shares. Yeah, we are reissuing the shares that were surrendered before, isn't it? Yes. So what we have to do, what's that called? See here, if the surrendered shares are utilized for the payment of an obligation, that's what's happening with the trade payables, then first we have to cancel the liability to capital reduction. Okay, so let's do that. See here, trade payables account debit 36,000 to capital reduction account 36,000. Okay, now you will feel like, why we are passing these into twice? You have to understand, I've already explained you. First a normal wave off happened, and then for the remaining part it was settled with the issue of surrendered shares, right? So if that's happening, if they are doing reissue, then two entries you have to pass now, and this is the first entry is reduction of liability account debit to capital reduction. So that's why we are passing this entry, trade payables account debit to capital reduction, 36,000. Yeah, the same thing you did with the debenture holders also over here, isn't it? Yeah, that's the same thing. So first you cancel the liability, and then you utilize the share surrender account to issue the new shares. Yeah, not new shares, the surrendered shares. Fine. So see here, share surrender account debit 36,000 to equity share capital 36,000. In the question they said, now see here, let me just read the question once again. It is to be settled by the issue of equity shares of rupees 10 each out of the shares surrendered, right? So you all know, whenever we utilize share surrender account to settle any liability, then always there will be two entries. First is reduction of liability, and then issuing the shares out of share surrender. Okay, two entries will be there. Here also there were two entries for debenture holders. Fine, you can combine the entries also, but there is a high chance of making mistakes like that, so please don't combine the entries. Do it in a bit expanded form, and your answer will be perfect. Fine. So share surrender account debit 36,000 to equity share capital account 36,000. Is this clear? Simple and straightforward. Okay, so this was a normal wave off as we used to do in the previous problems and all, and then this was a new thing. Okay, remaining balance settled with issue of surrendered shares. Is it clear? Okay, then let's move on to the next adjustment. See here, and then they are saying balance of profit and loss account to be written off. Okay, this is the thing that we do at last in the big entry, right? So that will do. And then the shares surrendered and not reissued shall be cancelled. Yes, even if the question doesn't say this, we will take the amount, the balance amount that is left in the share surrender account, cancel that and take it to capital reduction account. Yeah, I've told you. So see here, let's just do that. Let's just check how much balance is left in share surrender account. See here, first what happened in the second entry, the shares were surrendered, so we got 5 lakh first. Yeah, so 5 lakh plus 5 lakh in share surrender, we have 5 lakh, and then we utilize the share surrender by 1 lakh over here to issue 12% preference shares, so minus 1 lakh, and then we again utilize the share surrender at last over here in the 7th entry to what? To issue equity share of 36,000. Yeah, so minus 36,000, so that's equal to 3,64,000. You understood the calculation now? Here there is a credit and then debit. So credit means plus, debit means minus. Okay, 5 lakh minus 1 lakh minus 36. That's what I did just now in the calculator. So 3,64,000 is the balance that is there at last in share surrender account. So now what we have to do, I've always explained to you, while explaining the concept, that what you have to do, balance of surrendered shares remaining unutilized are cancelled. Those shares will be cancelled and that amount has to flow to capital reduction account. Okay, share surrender account debit to capital reduction account. Is that clear? So 3,64,000 has to be cancelled and amount to be taken to capital reduction account. See here the entry, share surrender account debit 3,64,000. So by this debit, share surrender account is completely finished. Okay, is that clear? 5 lakh minus 1 lakh minus 36,000, that's equal to 3,64,000, and then this amount has to go to capital reduction, so you will credit the capital reduction account. Clear? Easy. And then the ninth entry, yeah, what's that entry? That's just the big entry. Yeah, balance of profit and loss account to be written off. Now in this question there is no any other fictitious assets or anything, yeah, goodwill or anything, it's just the loss. See here, there is this loss of how much? Debit balance of profit and loss 6 lakh. So this we have to write off. Yeah. So first let's check how much balance we have in capital reduction account. Yeah. See, in the first entry there is no capital reduction, no capital reduction. Okay, here is there capital reduction of 1,68,000 first. Okay, 1,68,000 plus, and then here in fifth entry there is a credit of capital reduction of 36,000. So add that up, and then yeah, that's all right. Yeah, trade payables also 36,000. Yeah, two are there, right? So that's equal to 2,40,000, and then here also we have transferred 3,64,000 to capital reduction. So add that up to plus 3,64,000, that's equal to 6,04,000 amount in capital reduction. So you have to debit the capital reduction by 6,04,000. Okay, and the loss is of 6 lakh, the debit balance, right? So you will credit this debit balance of profit and loss over here. You'll credit this and write it off 6 lakh, and the remaining 6,04,000 minus 6 lakh, the remaining 4,000 has to go to capital reserve as usual. You all know, right? So this is the big entry. So now the all the entries are over. You have completely understood in very much detail how everything has been done. Yeah, the entire logic behind the share surrender account, yeah, the subdivision also, and I've also explained the consolidation of shares also. Now after this, now we have to prepare the balance sheet. So let's just see how the balance sheet will be prepared. Okay, now see, here we have the balance sheet of Revised Limited after the reconstruction. So in the bracket you have to write and reduced, and then the date as at 31st March 2021. So now let's start. See here, equity and liabilities, shareholders funds, share capital. Note number 1, 6,36,000. How is it 6,36,000? It's really simple. Just check the journal entries. You all know how do you prepare the balance sheet after the reconstruction. You have to see the old balance sheet in the question and then give the effect of the journal entries. Yeah, so in the journal entries, what happened? There was subdivision. So because of subdivision, what happened? The number of shares changed, yeah, from 10,000 to 1 lakh, and the face value also changed from 100 to 10. Yes, issued capital was same only. And then you have to see, and then there was a share center of 5 lakhs. So 10 lakh minus 5 lakh immediately. So that became 5 lakh remaining. Now out of this 5 lakh remaining, then what happened? You have to see here, you issued equity share capital to trade payables of 36,000. Yeah. So 5 lakh remaining shares plus this issue of 36,000. So that's equal to 5,36,000. Is that clear? So that is what you will take over here. See here, 5,36,000 divide by 10. So that's equal to 53,600 equity shares. Okay, fine. And then you also have preference share capital. So preference share capital, you can see in the journal entry. See, we gave preference shares to debenture holders, right? How much? 1 lakh. So that will come over here. Preference shares 1 lakh. Okay, and then in the bracket you have to write, of the above shares all are allotted as fully paid up pursuant to the capital reduction scheme by conversion of equity shares without payment being received in cash. Okay, all right. And then we have reserves and surplus. Now in reserves and surplus there was nothing. You can see in the old balance sheet, see, there was nothing except the debit balance which has been written off. So now you only have what? That has been written off now, profit and loss. It has been written off. So now you only have capital reserve of 4,000. So you will take that in the new balance sheet. Okay, note number 2, you can see capital reserve 4,000. Clear? Easy. And then long-term borrowings. Yeah, in long-term borrowings we have debentures. Yeah, if you will see in the question, debentures of 2 lakh and interest payable on debentures of 24,000. What happened to this? We reduce 75% from over here also and 75% from over here also. Okay, so 75% of 2 lakh is 1,50,000. We know that. So 2 lakh minus 1,50,000. Yeah, 75% of that. So that's equal to 50,000, right? So 50,000 debentures will be remaining. Yeah, unsecured loans 12% debentures 50,000. Is that clear? Or you could directly calculate 25%. 75% is gone now. So directly you can take 25%, that is 50,000. Clear? And then interest also, see here. Previously interest was 24,000. Yes. So now just take that. Previously interest was 24,000. 75% is gone. Yeah, it is reduced. So remaining is 25%. So that's equal to 6,000. Directly you could calculate like this also, 6,000. Okay. So see here. Other current liabilities, note number 4, 6,000. Interest payable on debenture 6,000. Clear? Easy. And then in the question we also had what? See, trade payables. So now will you take trade payables again over here? Of course not, because trade payables are completely finished, isn't it? If you see the journal entries, first 50% was reduced as a normal wave off, and then whatever balance was there, the balance means 50%, remaining 50%, what happened to that? For that, the company gave them surrendered shares, right? So trade payables account to capital reduction, 36,000 was debited and it was completely finished. So in the new balance sheet, trade payables will not exist. Okay, trade payables, it was 72,000. Now in the new balance sheet, it will not exist. See, so now in other current liabilities, you got 6,000, and then short-term provision. See, in the old balance sheet, there are short-term provisions. Note number 5, 24,000. See, what's that? That's provision for taxation. Now there was no adjustment, nothing regarding this, so that's why it will be as it is in the new balance sheet as well. Okay, 24,000. See, provision for income tax, 24,000. Clear? Easy, no change at all. So that's total 7,20,000. Let's just calculate. 6,36,000 plus 4,000 plus 50,000 debentures plus 6,000 interest on debentures plus 24,000 provision for tax. So that's equal to 7,20,000 total of equity and liabilities. Now come to the assets. Non-current asset, property, plant and equipment, note number 6, 1 lakh. So now there was no change in that. See, in the question also 1 lakh, here also 1 lakh PP. Okay, there is no change because there was no adjustment regarding that. It was very simple. Okay, and then see current asset. In current asset also, here also there was no change at all. Yeah, inventory same, only 3,20,000. Yeah, this is a simple question actually. 3,20,000. Trade receivable also 2,70,000 only, as it is. Fine. And then in cash also, was there a change? No, there was no change. See, cash 30,000 in the question, in the answer also 30,000. Why? Because see, just check the journal entries. There is no mention of any cash. Have you debited any cash or bank over here in any entries? No. So how can there be a change in cash? There can't be any change. It will be same only. Is that clear? So in total, that's also, let's check, 1 lakh plus 3,20,000 plus 2,70,000 plus 30,000. That's equal to 7,20,000. Okay, so it's tallied. Fine. So this is how you have to do it. It was really simple and straightforward. Okay, there was nothing over here. It's just that here I just wanted to explain how the share surrender works. Okay, how the surrendered shares are being reissued, and then how the remaining balance is taken to capital reduction. Yeah, and then there was a bit tricky language used in the adjustment of trade payables. Here most of the students think that only 50% has been settled through issue of surrendered shares, and that's all. They leave it, and remaining 36,000 they leave it in the balance sheet. No, that's not it. You have to completely finish off trade payables first, normal wave off, and then remaining balance settled with issue of surrendered shares. Is that clear? Okay, fine. So that's all for this video. I hope you have understood this. It was really simple. Okay, there was nothing over here. So that's it. See you in the next video. Bye.